We have seen U.S. crude production also rising to a record in the third quarter, really offsetting any potential concerns about supply. But at the same time, just before we came on air, we saw news that perhaps Iran's involvement in the Hamas attacks on Israel might have been larger than expected. So what are we expecting in terms of pricing? What's going to be more important for traders?
Iran will be more important. I think really it's unclear exactly. There are reports going around. We had the Wall Street Journal earlier saying that Hamas had been, helping. They've been getting help from Iran for weeks. New York Times said that Iran was surprised. It could be somewhere in between. It's really unclear. But really, the big thing that matters is the U.S. response. Right? No matter what the reports say, how the U.S. responds to this is the most important factor. If the U.S. tighten sanctions on Iran, or they try harder to make sure Iran isn't exporting oil and crude into the market, suddenly that's a bunch of supply that's off. A lot of Iranian crude, while still sanctioned, was making its way to China. And if they remove that, China suddenly has to scramble to find different avenues to buy from. So that's something I think the market is watching very close. And you can see it being reflected, when headlines come through, crude traders are buying and selling based off of that. So watch U.S. diplomats, watch the U.S. government, and see how sanctions, if any sanctions, come up against Iran.
What are we expecting then in terms of China demand at this point? Chinese oil demand is one of the things that I think the market was really hoping would take off this year. With the removal of the COVID restrictions last year, there was this expectation that Chinese demand was going to really surge, and it has been underwhelming. While it's been pretty strong, it hasn't been as strong. The recovery hasn't been as big as people were expecting. That is part of a larger Chinese economy story and disappointment there in terms of their increase in GDP, as well as their economic activity. Now, there have been some recent numbers that have proven that maybe Chinese demand is more resilient than people were expecting, but still, China has strong oil inventories. It's not clear if they're going to be buying a whole lot more. And if prices rise, we've dropped a bit over the last few weeks, but if prices rise, what will China's appetite be in the market is another thing that people are closely monitoring, and it's not 100% clear. But while Chinese demand is important in this picture, we're in a supply story right now for oil. Supply cuts, either from Saudi Arabia or Russia, or U.S. sanctions on Iran. That's, I think, truly what's driving the market at the moment.